Okay, so I'm here with Alex Gordon-Brander, who is the co-founder and CTO of Omega.One, the decentralized crypto exchange. And we are having a conversation about the future of blockchain and Alex's take on it. And I'm super honored to be here with one of the primary movers in the space.
Jason, it's a pleasure.
Thank you. So we were talking a little bit about your background in blockchain, and you're in an interesting position because you've come into the world of blockchain not from the tech side, but from the financial side, where you had this illustrious career in the financial world, and now you're bringing all that experience in to the blockchain world with, you have this incredible, huge knowledge and vocabulary of the traditional financial world. And now you're looking at blockchain as kind of the next step, your new project, and you have some really, really big plans for making your mark on it. And I'd love to hear both about your experience and what you're seeing as the future for the blockchain.
So let's start on a high level. We are, with blockchain, we're sort of, it's a tired thing, but I'm going to say it anyway. We're at around the same kind of place as we were with the internet in the sort of mid-late 90s, where it was obvious that this thing was a thing. It was obvious that it was transformative, but it was a sufficiently transformative technology that's sufficiently changing social relationships and business relationships that it's not obvious what this thing's going to do yet, because the vocabulary doesn't even exist and the social and economic forms don't even exist for what the technology is going to look like when it's mature. So it would have been a very far-sighted person who looked at, say, the New York Times and LiveJournal in 1995, 1996 and said, oh, that thing is going to eat that thing.
Yes.
But LiveJournal became, whatever, MySpace, Facebook, and now, the social media platforms have basically become the front end through which at least I consume most of my news.
Well, or Amazon, or
Amazon.
Google, and these massive tech companies that are now taking over.
Right. So in a similar way, there's a lot that's happening in blockchain right now that is exciting. Particularly, there's a lot from my end in the trading of Bitcoin and Ethereum and the other assets. That's very, very exciting. There's a whole world that we're just starting to see as the technology matures and scales that I think is going to shift the Internet of value in the same way that Internet 2.0 shifted the world of media.
So you say the Internet of value. Maybe unpack that a little bit.
So one of the amazing things about the internet is that it enables me to take anything that I can digitize, a book, a poem, a movie, and transmit it essentially instantaneously to anyone in the world. When it comes to $1, if I want to take $1 and email you the $1, there is a problem. Because if I'm emailing you the $1 and I'm still keeping the $1, we have an inflation situation. So the ability to transmit something around the world is not sufficient. It's sufficient when it comes to information whose value is not dependent on scarcity. But there is a whole class of items that the social and economic structure of the world depends on, for which it is essential there is only one. So the land deed to my house, the property deed for my car, a share certificate, a particular bank account, all of these things are only valuable in as much as they're not being replicated around the world.
If there's scarcity.
If there's scarcity.
Okay.
So at its root, what the blockchain is a technology that enables the creation and transaction of digital scarcity by creating a thing called a digital token or digital asset, which has a register that is maintained around the world, and so everybody can essentially point to you are the owner of this thing because you have and you control this particular token. And this allows a whole set of things from identity to ownership to capital markets to come into the purview of the internet and come into the purview of decentralized global technological and economic infrastructure that previously could only handle non-scarce items.
Okay. So essentially, with Bitcoin, we've been able to create a technology that allows the transfer of digital money anywhere around the world. And with things like Ethereum and with smart contracts, as kind of what you're saying, we've developed the capability to transmit any type of value around the world. And that, as you see it, is going to completely change the infrastructure of how value is exchanged.
Right. Now, I mean, we had technology to transmit value around the world before, but it relied on very sort of frictive rails and centralized parties that we had to trust to be maintaining the store of records. So, for instance, for land ownership, there needs to be some centralized registry of land ownership. You need to trust the registry. If the registry gets burned down, the records are lost, etc., etc. And even in America, when you buy a house, the actual movement of the title deed still involves some pieces of paper that are registered in a town hall in some municipality.
Yes.
And it's as much as the front end of the process is happening on the web, the actual sort of core thing is still old school pieces of paper.
Okay.
And so what at a high level, what the blockchain allows is moving all of that stuff into a framework which is not only much lower friction, doesn't require this idea of centralized government agencies and banks and people who we have to trust, who in lots of parts of the world are either corrupt or lose the records, etc. So you have a more trusted situation, a more global situation, and a less frictional situation.
Okay. So we're looking at peer-to-peer transactions of any type of value whatsoever in which the source of trust is not a third party but the technology itself.
Yes. Yes.
And that obviously is a tremendously powerful invention and could tremendously shake up how everything is done.
Absolutely.
And what I'm seeing right now is certainly Bitcoin was the first step in that, but now what I'm seeing is everyone rushing to figure out how can we use this to essentially do maybe everything we do as human beings, which is more or less everything we do as human beings, if you want to get really reductionist, can be seen as a value transfer, at least socially between people. So you're saying that we're kind of at the 1995, 1996 moment, and if you were to take a wild guess of kind of right now everyone's scrambling to figure out how they can use this technology, but if you were to take a wild guess as to where things are going to be, let's say in 5 years, in 10 years, if you could put your prognosticator's hat on, what would you be able to come up with?
Well, by lowering the friction and also making the information globally available and transparent, this enables not just easier human interactions with value, but also a lot of algorithmic interactions with the value chain. So everything from Internet of Things, not just self-driving cars, but self-operating cars, and
potentially self-owning cars.
And self-owning cars, absolutely.
It's a very science fiction kind of idea.
Well, I mean, we talk about sci-fi. One of the things I find fascinating about Ethereum is this idea that a human actor and a machine actor that engage with the Ethereum blockchain essentially have the same level, they interact on the same level with the same kind of agency. A machine, a program, an AI, whatever you want to call it, has a bank account. It has the ability to employ other machines. It has the ability to employ humans through the blockchain. And this is a from a sort of sci-fi level, a radical shift in our relationship with machine technology from a master-slave relationship to a more peer-to-peer relationship.
Interesting. So we're kind of seeing humans and machines working as equals, which is obviously going to be a big theme as AIs roll out into the world as well. Interesting. So,
and a lot of this obviously is very speculative because the technology is still too fresh to do very much on. Lots of things are in proof of concept stage. So just to level set for people, we don't as yet have armies of AI companies that are interacting with each other and thing, but the space is moving very quickly. So this is definitely within lifetime and potentially within years.
Okay, so I'm curious, coming from the traditional financial markets, and maybe if you want to talk a little bit about your experience there, how do you see blockchain? Where do you see the similarities between traditional markets and the blockchain, and where do you see this shaking things up?
Well, there's this concept of a digital asset and a cryptocurrency. Like Bitcoin is one kind of digital asset. There are a lot of sort of utility tokens and protocol tokens that are sort of early proto-digital assets that all have their own market infrastructure that has pretty much grown up in isolation from the whole world of traditional capital markets on Wall Street. Trading of cryptos has probably more DNA from trading of gold in World of Warcraft than it does from trading dollars and yen. And we're at an interesting stage now where in as little as the last 6 months, there are $25 worth of Bitcoin traded every day for every dollar that was being traded in February or March of this year.
That's incredible.
Yeah,
that's
so
incredible.
Daily volumes have gone up from, I would say a year and a half, 2 years ago, $100 million was a big day, $20 million was an average day. Beginning of this year, a couple $100 million a day, now $4 or $5 billion a day. This has now become, between the increase in trading volumes and obviously the massive value increases in something like Ether, which has gone up 3,000% so far this year, Wall Street started to notice. Wealthy families have started to notice and say, wow, maybe I should be putting a couple percent of my portfolio into crypto. We're seeing investment banks starting to take a look. Even pension funds and large asset managers are starting to think about how they should be situated with regard to this space. And so we have this coming together of this new technology with the money in the forms of traditional finance. And there's a kind of a melting process happening right now, which in the happy outcome, I think basically, my 10-year picture for this thing is that Apple shares are going to become tokenized. The dollar will be on a blockchain.
Fascinating.
So every asset is going to end up on a blockchain. And in the same way that, blog posts were sort of started out as an alternative to things you read in a newspaper, and then it all sort of got absorbed and became digital media, that right now cryptocurrencies are a sort of little slightly weird Wild West offshoot of traditional capital markets, but that from a technological basis, they're just going to absorb all of the existing asset infrastructure.
And do you think they'll also absorb bank infrastructure and the infrastructure of how financial transactions are done as they are now, like credit card payments?
Absolutely. I mean,
interesting.
The whole underlying infrastructure of how money moves around the world was mostly built in the 70s. So things like SWIFT, the payment network, if I wire money to somebody overseas, it's traveling along, mainframe computer rails. And a lot of this stuff is very, very ripe for replatforming. And blockchain, of all of the bets that one can make in the space, the replatforming of these rails is probably the biggest slam dunk of all of these things. And so...
And do you think that that'll be done with technologies that currently exist, like Ethereum and Ripple, or completely new blockchains?
Well, that's a totally different question.
Okay.
And that, I think, is one of the big things. I personally don't think Ripple is the answer. I do think Ethereum has the potential to become the blockchain of blockchains. But I also think a lot of these things are going to be private networks. I don't, for instance, think that the Fed is going to issue dollars onto Ethereum. I think the Fed's going to issue dollars onto Fed chain, and we're going to find more and more mechanisms for different blockchains to communicate with each other and for value to transfer between them.
Yes. Okay. So let's talk about the average individual who's
Yes.
just becoming aware of all this, and we've had a very high-level technical conversation.
Yeah.
For the average individual who their knowledge of blockchain, they may not fully understand blockchain, and their knowledge may be that they're just simply seeing that Bitcoin and Ethereum are going way up in value on CNBC or something like that, and they want to become, they don't want to miss the boat, they want to become involved in this space, but they're maybe kind of afraid of jumping into the water. It's a little intimidating. There's a lot of maybe specialist knowledge that it seems to be needed to get involved in it. What would you say to the average person about how to become aware of this world and interact with it now that it's happening?
Firstly, don't be afraid. Secondly, don't sell everything and buy Bitcoin. I think in terms of just pure pricing, I think that the market cap of cryptos in 10 years is going to be a great deal higher than it is right now, but there's a fairly high likelihood of major crashes, and there's still a lot of volatility in the market. So it's, for the average person, this is a place, I think, a pretty good and interesting place to play with your sort of capital you're willing to risk, but it's certainly not sort of a safe haven to put all of your retirement savings. Mm-hmm. How you actually would get engaged, there's a lot of different mechanisms right now, none of which I think are actually terribly good, which is part of why we're building a mechanism which I think is going to be good and is going to be the right way for people to come and engage with the market from scratch. There's a lot of different sort of levels to the question of how to engage. So can you be a little more specific about what it is you want to know?
Well, so the average person is maybe thinking about, should I buy Bitcoin? Should I buy Ethereum? And I think the biggest question is it in a bubble? And is it something that should be invested in? And you've spoken to that a little bit, but...
So, I mean, is it a bubble? It's certainly speculative value, in as much as the value of, let's take Ether, for example, the total value of all the Ether out in the world is currently, $28 billion.
Wow.
Up from $1 billion at the beginning of the year. So one is always right to be a little wary when something has gone up in value so much, although the price seems to have stabilized a lot. There's not enough sort of usage of, Ether is kind of like the gas that makes the Ethereum blockchain run. There's not currently enough people using Ether to sustain a $28 billion value. That's a bet that the Ethereum network is going to be very big. In the same way that, when you're buying into a company at an early stage, you're making a bet that the company is going to get much bigger and generate profits. What's tricky with things like Bitcoin and Ether is the potential sort of maximum case of how big these things can get is so astronomical in relationship to traditional companies. And when you look, the entire value of Bitcoin is less than the value of Netflix.
Wow.
The entire value of all cryptocurrencies is around Bill Gates' net worth. So when you look in that context and you see the possibility for Ethereum being the global supercomputer and the fundamental rail by which all value is transacted on the world, well, hey, 28 billion seems pretty cheap. When you look at it compared to 6 months ago, whoa, 3,000% rise. Did I miss the thing? And, well, yes, you definitely missed that. But it's hard to tell. I think one of the things that's always tricky when you're investing in a new sector is that you have to make plays on individual currencies or individual companies in a sector. So back in the early internet days, people who said, wow, the internet's going to be huge, and then let me buy a piece of pets.com and a piece of Yahoo
yes.
and a piece of AOL or whatever, would have got the underlying picture that the internet was going to be huge, but still have lost a lot of money. And so it's the same situation right now. I'm absolutely convinced that blockchain is going to be huge. I don't think Ethereum or Bitcoin is pets.com. I think they're more likely to be the Google than the pets.com. But it's still very, very early days for the technology. There are other technologies like IOTA, for instance, which is a different mechanism from a blockchain to meet the same fundamental goal.
Yes.
That, I'm not making a bet on that thing, but that may outperform Ethereum. There's EOS, which is a new blockchain which has claims to be much more performant than Ethereum. So, it's a risk bet on any of these individual things. And I'm just not going to say buy or don't buy because, one of the things, again, you asked a little bit earlier about my background. I spent 5 years Bridgewater Associates, which is the world's largest and most successful hedge fund. And one of the things that was beaten into us in that environment is how skeptical one has to be about one's own bets. And frankly, if you can call markets on a 55-45 basis on every bet, but you make a whole bunch of diversified bets, you'll outperform anyone in the world. And so the idea that you can call any of these things in a sort of 100-0 or even 90-10 kind of way, it's it's fine until it's not.
So let's talk about Omega.One, because clearly you think that the blockchain market overall is going to keep getting huger and huger, and you're banking on it by creating this exchange. Do you want to talk maybe about what you're up to with Omega.One?
Yes. So as I said, we're in this fascinating time in crypto trading where something that was sort of like World of Warcraft gold trading back 5 years ago, 6 years ago, then people started cobbling together exchanges, pretty much in their mum's garage. Then we've got some players that have now expanded and, say Coinbase recently took $100 million investment at $1 billion valuation. So we've gone very quickly from a sort of hobbyist space to a space that has some serious players in, but it's still a massively immature marketplace compared to anything in traditional finance. And there's a great deal of kind of, say, volatility and trading. And trading is difficult, trading is expensive, weird things happen. Back in July of this year, on one of the main exchanges, somebody put a $20 million sell order in Ether on the GDAX exchange, and the price dropped from $320 to 10 cents.
Yes, I watched that happen in real time. It was an interesting feeling.
Yeah. A friend of mine had a $10 or $11 buy order, and so did very well out of that situation. But generally, this is, this is not a sign of a mature marketplace. So what we're doing, this is, if we look at where, say, the equity market was in 2000, 2002, the Big Bang happened in, say, 1989, where trading started to move electronic from being, mostly men with blazers yelling at each other in mosh pits. But really, it took another 10 or 15 years from that point for the more complex ecosystem of middlemen and electronic brokers and things to show up that enabled trading to be smooth and easy and cheap for players in the space. And we're trying to essentially, like everything else in crypto and blockchain, replicate decades of development over a very short period of time. And so Omega.One is a trading platform that is going to be connected to all of the world's trading exchanges for crypto and give people an opportunity to trade much more smoothly and easily than they would if they had to trade on the exchanges themselves.
Fascinating. This brings up a related question, which is that obviously high frequency trading and AI trading has really taken over the traditional markets in a way that makes it next to impossible for the average investor to try to trade. Has this already happened in the crypto markets? Is it happening? Will we see this same kind of lockout by high frequency traders?
Well, high frequency traders aren't really a thing in crypto yet because the market hasn't even evolved to a level where that strategy is operational. It is still so expensive to trade in crypto that the high frequency strategy doesn't quite work, but there are certainly sharks in the pool, and there's a lot of interesting analysis being done recently about large players that have been manipulating the markets and moving them up and down. It's less sort of algorithmic high frequency stuff and more traditional market manipulation.
Okay, through social engineering and that type of thing. Okay.
Yeah. But I mean, as the market evolves, I think we're going to see more and more of that. There's always an arms race between the, let's say, players who are looking to create a level playing field and provide access to liquidity for customers, and then players who are attempting to sort of predate upon that process.
But it sounds like that there might be a short period of more opportunity in this space than maybe in traditional markets before they get fully regulated.
Well, I mean, look, there's still a lot of opportunity in traditional markets. You're just paying a tax to the guys who are sort of, draining a little bit out of every trade. If I want to go and buy some Apple stock, I can buy Apple stock nicely and easily. Just in between me putting my order in and my getting my Apple stock, some HFT guy went, bought the Apple, saw my order, bought the Apple stock before me, sold it to me, and took a little slice. In the crypto markets, the issue sort of is much simpler, which is just simply it's harder to buy the Apple stock in the first place. There are maybe 8 different places I can go to buy my Bitcoin, or buy my Ether with my Bitcoin, and the prices are very different on the different exchanges. The interfaces are difficult. Exchanges can get hacked easily. So it's much more a sense of an early stage cobbled together infrastructure.
But the future looks very bright.
Well, I think the future's incredibly bright. And this is a 2018 is going to be a very, very interesting year in crypto. This is the moment when enough has happened, and this is why I'm very bullish about the space as a whole. Enough has happened in the space to get enough attention from traditional money, from both the wealthy families, institutions, Wall Street, etc., that there is a tsunami of money that is going to be coming into the crypto space, and there's a lot of friction on that boundary. And so, we're trying to build a bridge between, the money, the $30 trillion that's sitting outside crypto and this, the $150 billion crypto space. And as soon as that bridge is open and money can flow in and out more easily, I think a lot of the underlying technological benefits of the digital asset space are, going to basically absorb a lot of that money across. And I think likely we're going to end up seeing, as I said, all of these different assets that exist out there being absorbed and becoming crypto assets over time.
Wow, amazing.
And not only that, it's not that there are, they have $30 trillion of assets out there that are going to become crypto assets, but because crypto and blockchain is a just significantly more efficient and lower friction form of money, I think that 30 trillion could actually become 300 trillion when it crosses into crypto.
Wow.
So we're at super, super, super early days at this point.
Well, I'm looking forward to surfing that tsunami, as you put it. So thank you so much for talking to me, Alex. That was a great
Thank you,
conversation.
Jason.